What an awesome way to kick things off here with Mance and Lehman. They'll obviously be around throughout the entirety of the day and participating in some critical conversations as well. We're going to jump into our first panel discussion, which is cross-border and more, what's fueling the growth of crypto payments. Joining us are industry leaders shaping the future of payments. They're going to be exploring challenges and opportunities in remittances, micropayments, as well as national payment systems. Please welcome our moderator, Rob Allen, and the rest of the panelists.
So, good morning, everyone. So delighted to be here. I'm Rob Allen. I'm the Hedera Governing Council representative for Australian Payments Plus. I'm delighted to open proceedings here with this illustrious panel. With me I have Ahmed, Sushil, and Alisa. And I'll, before we get into the questions, I'll ask them to just introduce themselves quickly.
Hey everyone, Ahmed Zifzaf here. I lead crypto partnerships at Worldpay. Worldpay is one of the largest financial institutions that processes payments globally. So think trillions of dollars in payment flows, 12% of global credit card transactions. My remit is primarily all of our on-chain activity. So everything from stablecoin settlements, stablecoin payouts, giving our merchants access to the latest in DeFi and sort of financial payment innovations is my entire world right now. So excited to be here and speak with you all.
So cool.
I'm Sushil. I'm the CEO of Dropp, a micropayment company. Just in terms of background, I've been in the fintech financial services product business for the last 30 years. Specific to payments, in the early 2000s, I worked with JPMorgan Chase building one of the first peer-to-peer payment company called ReadyCash. And then fast forward 15 years later, payments have become exciting again. And we launched a product called Dropp. It's a payment platform focused specifically on reducing transaction fees and making payments instantaneous, both on fiat and using crypto. Thanks for the invite.
Thanks, Sushil. Alisa.
Awesome. Hey, everybody. My name is Alisa DiCaprio. I work for Swift as head of industry engagement. And before that, I was chief economist at R3. So my remit at Swift is largely to work with central banks and to work with payment market infrastructures to increase the speed of payments, increase the transparency of payments, as well as building out digital public infrastructure.
Thanks. So I've been working in payments for nearly 30 years now and been in blockchain and more recently Hedera for nearly 12 years. Building new payment systems is a grind. It's hard. Financial services regulation is always there, ever present. And you have to work with banks who are heavily regulated. But we have seen recently the rise of payments and crypto payments, stablecoins, CBDCs. And it feels like 2025, stablecoins are the killer app. Everyone's talking about them. The biggest stat that has resonated with me recently is that in 2024, over $26 trillion worth of value was transferred in stablecoins, which, to put into perspective, is more than Visa and MasterCard put together at around 23 trillion. So I think this kind of sense that 2025 is going to be the year of stablecoins and crypto payments has a lot of backing in terms of fact. But let's start with with some kind of high-level questions for the whole panel. What are the key drivers do you see for this kind of upswing in the use of payments, use of crypto with payments, and what are the barriers to it even going even further? Ahmed first.
Yeah, I would say broadly, you look at high cost of capital around the world, so businesses who want to get access to their capital quicker and faster. Stablecoins as a technology primitive really does enable you to transact a lot quicker, a lot cheaper, a lot more efficiently, and be able to use that capital, whether it's yield bearing, whether it's lending. You have a lot of different options in that respect. I think kind of in tandem with that high cost of capital sort of economy that we're operating in globally, you have inflation risk, currency risk. So you're seeing a lot of the emerging world want access to the US dollar. This sort of is one of the easiest or most accessible methods for both users and businesses to really participate with those assets. So I think what you're seeing is a lot of interest in getting cheaper, faster, better payments, getting access to the US dollar in ways you might not have been able to before. And now we have a lot of the different infrastructure and trust across the ecosystem to really allow you to do that at scale. So it's something at Worldpay we've been experimenting with and deploying for the last couple of years. But I would say this year, kind of to your point, it's one where we really want to get focused on how do we really boost stablecoin settlement, payouts, pay by stables, pay by crypto as initiatives that we can enable our merchants to have sort of great success globally in letting their consumers and their merchants really grow their businesses in that way.
Cool. Alisa, can I go to you next? The
Absolutely.
SWIFT network is world renowned for moving or messaging that enables money movement. Where are you seeing the key drivers for this shift to crypto payments?
I'm going to give you a very different answer.
Okay, cool.
So I think, from the perspective of cross-border wholesale payments, really where we see the drivers of stablecoins coming from is, first of all, just the existence of DeFi, right? So institutions, customers, clients, all of them see that it's possible to do instant payments, it's possible to do instant settlement. Why aren't we doing it in all of the different transactions that we have? So I would say that's very directly the first driver. And then the second driver, honestly, is really around the G20 goals. So the G20, which is only 19 countries, you're welcome, has a goal for 2027 that something like 75% of global payments are credited to the beneficiary's account in less than an hour. And so how do you do that with traditional payments? It's really challenging. So it's kind of straightforward. If you're doing this with digital assets, that works very well. If you're doing it with traditional payments, it's a little bit more difficult. So one of the things that we find, for example, is that already 90% of payments are credited to the beneficiary bank in less than an hour, but then the actual account of the recipient, only 43% of those flows, 43% of the 90% are going into the beneficiary's account in less than an hour. And that's for reasons of batching, which you don't need to do with stablecoins. It's for a reason of closed payment systems. So maybe the payment went overseas, the system was closed at the time, so it's not going to get credited in an hour. And then different compliance features. So there's some jurisdictions, for example, where you need to pay the beneficiary before you actually credit the account. I'm sorry, you need to call the beneficiary before you actually credit the account. That's going to take you some time. So these are the two main drivers that we see from a wholesale cross-border payments perspective.
Cool, thank you. Sushil, you're kind of crypto first. So are you riding the wave? Do you feel that that's being kind of a key driver for your business?
Yeah, let me just answer the driver aspect of it. We being both fiat and crypto, we see a different angle, and maybe it complements what Alisa just mentioned, is we see that there's a maturity in the blockchain technology at this point. Because the need in the market is to have a product that is cheap, less error prone, and really fast, right? And blockchain technology does offer that, but the maturity of the blockchain technology really makes it much easier. Stablecoin being one of the reasons why I feel that you could use it. But there's also a mandate internationally, not in US yet, of building instant payment rails, instant banking rails, right? And we see these are the two drivers. When you bring those two technologies together, you can actually make it possible to have an instant payment across borders, right from fiat to crypto, crypto to fiat. So I think there are like these key drivers that are really driving the market right now, because in US we have RTP, in the rest of the world there are different technologies which lets you do the last mile, which is how do you convert that off-ramp, on-ramp? How do you convert that last crypto which you got in Thailand, someone paid you in USDC, and now you want to convert that to baht? How do you do that? And I paid them in US dollar. it is now possible, and it is because of the maturity of the blockchain technology in the last 10 years, which is more cost-effective, more scalable, and stable coins, which really makes it possible. And to us, that is what the main drivers are right now.
So once we've got these drivers in place and we all kind of agree that we're being kind of forced forward with this new technology, you then get this kind of inhibitor, which is enterprise adoption. Yeah, so we all know enterprise change moves glacially. So how do those two things come together? What do you see in terms of the ability for enterprise to adopt this new technology? And if I direct that to you, Alisa, first, because Swift has this, probably the most glacial of change processes for obvious reasons. Where are you as Swift adapting or augmenting to incorporate this new technology?
Well, I'm gonna say there's really two levels of this. So the first level is internal, and the second level is external. So internally, right, we have message fields, we have things like this that need to be adjusted. So for example, if you're doing a cross-border payment, there's a drop-down currency menu. It's an ISO menu, it's not a Swift menu, but it doesn't have stablecoins in it. Yeah. So that needs to be adjusted. The size of the fields needs to be adjusted. Right now, well, we're in the process of making changes like this, but the size of the field will fit a BIC number. It won't fit a wallet address. So these are the kind of mechanical problems that we have to work through. So I think those are happening. Mm-hmm. And then the second level at which Swift works is with our with our banks, right? So Swift is just, we're the network, but really where the problems happen or where the changes happen is at the bank level. So a lot of what we're trying to do is make it easier for banks to then incorporate these new technologies and these new payment instruments. Yeah. So that's it's a combination of addressing the reasons for fragmentation, addressing the compliance issues. Compliance is hugely problematic for these banks because, of course, if you're using traditional rails, right, you have a certain way of doing compliance. If you're using stablecoins, you need to collect a different kind of data set. You need to know the person's mobile number. You need to know the place of residence. You need to know the place of birth. These are things that you don't collect in a normal bank transfer. So with compliance, that's a problem. We're trying to help our different banks deal with that. So I think it's really around these two levels. It's both internal, which is fairly straightforward because we're a company, you can change those things. And then it's external, which is how do you change all of the different nodes in your network and make it easier and less costly for them. As an example, right, there's 120 plus, somebody in this room knows this correct number, different wallet providers. If you're a bank, do you think you're going to integrate with 120 different wallet providers? Of course not. That is hugely expensive. But if we can provide a way that they could integrate maybe with an aggregator or some other way, then that would make it cheaper for them and make it more straightforward for the entire industry. So this is really where we're looking. We've done a lot of POCs, kind of live trials, to understand where the different pressure points are and where the frictions are and how they can be addressed.
Yeah. And 2025, you've got a lot of live trials coming up, because we were talking to your team last week, and some amazing stuff coming up. Sushil, from the other end of the spectrum, sure. Then, we'll still talk about banks, but you've just announced a partnership with Truist Bank.
Yes,
Do you want to say a few things about that? Because that integration, that adoption aspect is key there.
Correct. So, as I mentioned, with Dropp, we use two technologies. We use real-time payments from the banking industry, and we use Hedera's crypto ledger for all the good reasons. So you can actually make payments in US dollar, and you can make payments using USDC on the same. So one very important aspect is the instant payment, which you get automatically when you use crypto. You don't get that when you use a banking rail. So we've been working with Truist for the last 7-8 months, even before that, to actually enable real-time payments through the banking infrastructure. RTP is offered by the clearinghouse. Many of you might know. Just like you have Fed now, you also have RTP from the clearinghouse. And we've been working with the Truist team so that merchants can get their US dollar payments instantly. Merchants already get their USDC and HBAR payments instantly. But we wanted to make the second leg of it, which is if you have US dollar payments, you can make that instantly. This is a part of a bigger game for us where when we get into the cross-border payments, you really should be able to, as a small merchant, as a bigger merchant, you have lots of options. You can like Amazon Marketplace has a lot of options, they have it for the cross-border. We want to make it possible for a small merchant, no matter where they are, where they can take payments in fiat, in their local currency, or in crypto. And you should be, sitting here in US, should be able to make that payment, and no matter what currency is, and Dropp would take care of the exchange, take care of the exchange. So this is a part of a longer journey, but we needed that real-time payments, because real-time payments in the banking infrastructure, we didn't have it. So it was a big thing for us.
That's amazing. You've really been trailblazing for Hedera with Dropp and micropayments. Micropayments is one of my first loves and my personal origin story with Hedera. So thank you very much for blazing that trail. Ahmed, on the merchant side, I mean, Sushil just mentioned kind of small merchants, but you've got one of the biggest merchant networks in the world. Are you seeing demand from merchants to accept stablecoins, and are there kind of places in the world where it's more prevalent than others?
Yeah, I think it's like a very interesting topic to see. And I think a lot of people have different perspectives depending where they are in size, where they are in crypto native versus not. I would say the big learnings I've had, or the big insights I've had, is that global companies that do a lot of payments, sort of the gig economy giants that we know today, the Airbnb, the Ubers of the world, these are the types of companies where they have very complex payments that they have to constantly do on a regular basis. Think of every driver around the world, think of every host around the world. When you think of something like stablecoins, you start to now imagine a much better, more sophisticated payment system where you can pay people out globally instantaneously or close to instantaneously, and really start to create this effect of a bunch of people around the world, businesses, individuals, who want to hold cryptocurrency because of the advantages that they have. I think you also have this big interest and demand from capital-intensive businesses. So think your remittance companies, your money service businesses. I would say for the past few years, these companies have, in secret or in hidden in their back end, been using stablecoins to do things like FX and cross-border payments a lot more swiftly. But I would say from a crypto payment side, I get pitched a lot and I see a lot of data on luxury, airlines. These are all major verticals that people want to pay with crypto. I would say there's still probably a gap in terms of where merchants are seeing their consumers are in demand for it. But from like a pure technological advancement standpoint, I would say you want to pay out global suppliers, users almost instantaneously. Stablecoin tech is really what they're exploring today and what we're trying to help enable them with.
That's fantastic. I mean, we're running out of time. We could spend all day, this panel probably needs a payments plenary, whoever's organizing the next one. I'd like to switch tack now to talk about interoperability and standards. From my perspective, I think these are problems that need solving in order that we can really truly scale and embrace the potential for programmable digital money. So in turn, I think each of you speak to interoperability and standards, starting with you, Alisa.
Sure, I love interoperability and standards. What more would you like to know? I'm kidding.
Where do we need, to be a bit more pointy about it, what do we need to start with right now that will make the biggest change, and where's the low-hanging fruit?
Okay, so I think that's a good way to think about it. I think in standards, a lot of what I was talking about earlier is already well in motion, right? So for example, what kind of data are you collecting? What do you need? How are you doing compliance? How are regulators doing this? This is all in progress. I think the question of interoperability is a little bit more tricky, right? Because what we're seeing with stablecoins is this explosion of new types of financial instruments, which is fantastic, but it also increases complexity enormously. Yeah. And so how do you simplify that so you make sure that there's still a stable flow, right? And you make sure that everybody can access this, because right now that is definitely not the case, right? You certainly have different sectors that are using it heavily and some sectors that are not using it at all, but that should be using it. So I think in terms of, we've focused a lot on financial fragmentation and how to reduce that. And it's not just a story about one company doing it. It has to be a collaborative effort. One of the things that we're doing is working very heavily on digital public infrastructure. And this is interesting because this is the idea that you have institutions and you have governments which traditionally have not built payment rails, right? Payment rails are often built by the private sector and sort of backed up by the public sector. And now we see the public sector saying, oh, there's all these things going on. We actually have to be involved in this. And you see this movement of national payment systems, of different regulations about AI and DLT and stablecoins. And so how are all these things coming together? And so we're really working to collaborate with different institutions and different governance now on the public side to see how that can reduce some of the problems with interoperability that we have from this hugely fragmented sector.
Great, thank you. Ahmed.
Yeah, I would say when it comes to interoperability, obviously you see a proliferation of stablecoins being issued today, infrastructure companies, everyone is interested in this market that's coming or this market that we're currently seeing growing. So from a Worldpay perspective, when you think of interoperability, if we have a merchant that wants to settle in a particular stable, but then they want to pay out in a different type of stable or they want to accept in a different type of currency, we have to think about how do we do those conversions, how do we create payment flows that are interoperable so that you're not losing efficiency from the technology unnecessarily. But I would say it's still a bit early to understand where will be the biggest sort of technological demand exist. So keeping yourself flexible and interoperable basically allows you to take advantage of those moments or those opportunities as they come about. But yeah, I would say it's still a bit early, so there's only a few players I think who are really focused on this interoperability layer. Keeping close with them obviously gives you a lot more access.
Yeah. You mean things like Chainlink, CCIP,
Chainlink,
CCTP,
Layer 0.
Layer 0.
Yeah.
Sushil, from a businessman's perspective and a startup founder, interoperability is key, right?
It is a big. I would say there are three things. Just because we're running out of time, digital wallets don't talk to each other. Chains don't talk to each other. I mean, these are all the issues because we have liquidity pool. Just take USDC. You got liquidity pool in Hedera. You got one in other chains. And we actually worked with Circle on this, where we had a transfer API by which we could tap into Ethereum and other liquidity pools. So that is a big issue for us. And the third is universal ID. I mean, there is Open ID as an organization that's doing work on it. But that is still, that's the biggest barrier that we have right now in crypto and everything else that we're doing in expanding is the fact that the chains don't talk to each other. And I'm looking for Chainlink and I guess Layer 0, hopefully they solve the problem.
Yeah. Well, I think those changes are coming. From what I understand, they're problems that are very well understood and the right people within the Hedera ecosystem are focusing very heavily on improving cross-chain liquidity and interoperability. So I think good things will happen. We've run out of time, which is devastating to me because I had lots of really, really cool questions to ask, but maybe I'll save them for next time or later. I want to thank the panel, Alisa, Sushil, and Ahmed, for some amazing insights into the payments industry. And I'm sure they're around all day to answer your questions if you want to grab them at the side. Thank you very much.